4 p.m., India's first airline with a foreign partner is ready to take off. The Foreign Investment Promotion Board clears AirAsia's proposal to buy 49% in its joint venture with the Tatas. The Chennai-headquartered AirAsia India says it will focus on smaller cities to start with. The empowered group of ministers headed by Finance Minister P. Chidambaram will decide on the third round of the 2G spectrum auctions today. With telcos virtually boycotting the first two rounds, sources say the government may be forced to slash the prices. Market regulator SEBI will have to make public the proceedings in the insider trading case against Reliance Industries. The Bombay High Court throws out SEBI's plea seeking permission to keep the case details a secret. Indian equities end firm, taking cues from strong European markets. Benchmark indices end with the day with a gain of about 0.5%. Banking and real estate stocks surge ahead on hopes of an interest rate cut by the RBI in its monetary policy review later this month. The farm loan waiver scam rocks the parliament after the CAG report alleges massive diversion of funds. Prime Minister Manmohan Singh says stringent actions will be taken against the guilty after the opposition stalls House proceedings. A very good afternoon and welcome to Business Day. I'm Sonali Krishna. Let's go to the top story. The first foreign carrier can finally take off after the Indian skies were recently opened up. The Foreign Investment Board today approved 80 crore investment proposal for the AirAsia joint venture with Tata Sons and Arun Bhatia. Mrinalini Krishna was tracking that meeting. Mrinalini was there and raised some concerns on this proposal and how they've been taken care of. Mrinalini.
After the Indian skies were open to 49% FDI in aviation, this is going to be the first investment proposal that got clearance from the government today. The FIPB today cleared AirAsia's investment proposal. The proposal amount is almost 80 crore rupees for a 49% stake in the JV that it has with the Tatas. Of course, Finmin sources saying that initially there was some bit of ambiguity on whether the FDI and aviation norms apply to only existing JVs, or are they applicable to new JVs as well. However, after deliberating on press note 6 of the DIPP, the FIPB reached a conclusion that there is no ambiguity. It's absolutely clear that the FDI and aviation norms are applicable to all JVs, whether they're existing JVs or new JVs, which is why they went ahead and gave this investment proposal of AirAsia a clearance. And this is, of course, going to be the first foreign air carrier that comes into a JV like this after the Indian skies were opened up to FDI and aviation. And clearly, the only thing now that stands between this JV taking off is the regulatory clearances from DGCA and Civil Aviation Ministry, the license that they need to get. And after that is when this JV will start operating in India. But as far as the investment proposal is concerned, it's a go-ahead from the FIPB.
Now, the ministerial panel on spectrum is currently meeting to decide the modalities for the third round of 2G spectrum auction. With round 2 getting almost no response from a single GSM player, the government is under pressure to revisit prices. So what is on the agenda? Gauri Trivedi joins us with more details. Gauri, please fill us in.
The ministerial panel meeting is underway. In fact, an important decision really has to be taken around the modalities of the 2G auction as far as the third round is concerned. It's important to note that a decision as far as reserve price will be taken for the third round of 2G auctions. In fact, the Department of Telecom has indicated that the EGOM can either choose a new price altogether for the next round of auctions, or it can, of course, take the benchmark of the previous auctions in November 2012. In 18 circles, bidding did take place, and therefore there is a certain market price that has been discovered, so to say. Or in fact, the option of actually consulting and referring back to the telecom regulator, TRAI, has also been put on the table by the telecom department. It remains to be seen what will be the ministerial panel's decision on this. It's important to note that the round 2 of the 2G auctions has been a complete no-show, really, with no GSM player showing interest, and in fact just one player in the CDMA auctions, and that too only in select 10 circles. So it remains to be seen how significant can be the drastic and how drastic can be the reduction in prices that the ministerial panel will decide on.
Now, in the latest development in the RIL insider trading case, the Bombay High Court has disposed a SEBI plea challenging a CIC order that sought RIL probe disclosures from SEBI. Well, Ashwin Mohan, who tracks that bit, joins us live from the newsroom. Ashwin, fill us in.
Well, we don't have a detailed copy of the order, but on the face of it, it does look like it's a shot in the arm for Reliance Industries Limited, because the Bombay High Court today has disposed of SEBI's appeal that was filed against a CIC order on the grounds of an earlier Delhi High Court order in the same case involving the same three entities. Let me quickly explain. The CIC, or the Central Information Commission, had passed an order directing SEBI to disclose details relating to their insider trading probe against Reliance Industries. This probe dates back to 2007. So the CIC order wanted SEBI to in fact disclose details of the entities involved. It also wanted SEBI to disclose details of their investigation reports. SEBI, however, was uncomfortable with this, because SEBI's stance was that the investigation was continuing, and therefore it was not in public interest to disclose all these details. The Delhi High Court, of course, was of the opinion and passed an order later saying that Reliance should first be heard, and only after Reliance is heard should an order be passed by the CIC. SEBI, on the other hand, had approached the Bombay High Court. Their appeal has been disposed of today. However, it remains to be seen whether or not SEBI will challenge this order at a higher court, that is the Supreme Court. But clearly, for the time being at least, Reliance stands protected because of these two orders.
And on to the Lal Street, where the Nifty gained for a second day in a row to close above the 5,800 mark. On the back of positive cues from global peers, IT stocks hit fresh highs on the index, and realty stocks like DLF, JP Associates left the gains. Megha Chadda joins in with all the trading action. Megha, over to you.
Well, we had a good start to the trading day as expected, in tandem with the global cues in fact as well. So above that 5,800 mark, and managed to maintain some very steady momentum through the day. In fact, ended firmly above that 5,820 mark as well, with gains of about 0.6%. So both the Sensex and the Nifty did quite well for themselves, as did the broader markets, where we actually saw gains of over 1% come in. The biggest sectoral mover in the session today was the realty pack, and remember that this particular sector has gained over 7% in the matter of last 2 days alone. In fact, the big movers here was an HDIL that was higher by about 13%. Anant Raj Industries, Shobha Developers, Oberoi Realty as well added on good 7% or more. DLF as well was a star in this session. The loser, however, was the FMCG pack that lost out about 1%. So it was basically rate sensitives that did well. So we saw the metal pack also rising close to 2%, capital goods also doing well. In fact, in the metals pack, we had a Sterlite, Hindustan Zinc, Sessagoa, all of them adding on anywhere between 3 to about 5% almost.
So what is expected in the second half of the year, and how are global cues going to impact the Indian market? Well, listen in to our expert voices.
The expectations are that in the second half of the year you should see rates coming off. So there should be a positive sentiment for rate sensitives. And again, there is a fear on the current account deficit being where it is, and if currency weakens further and it goes beyond 56, then obviously your export-oriented stocks should find a flavor with investors.
FI flows will be the key determinant of the fate of the Indian markets, and any political and any tremors felt globally, I think, would impinge on the trajectory of Indian markets far more than any other emerging markets.
Let's get a sense of how the F&O activity shaped up today. We have Navneet Saluja from our research desk standing by. Navneet, fill us in.
Well, second day of gains coming in there for the markets, and if you look at the closing of the March futures, they almost closed at day's high at about 58.46. The premium too inched upwards to about 28 points to the spot Nifty, and during the day the March futures added about 7.7 lakh shares in open interest. And focusing on the options data, well, the most important takeaway today was that the Nifty PCR touched the level of 1 after almost 15 to 20 trading sessions. So you got a lot of put writing today at 5700 strike, which added 11.8 lakh shares. 5800 strike added about 14.5 lakh shares, whereas on the call side you saw open interest being shared for 5700 and 5900 strike, whereas 6100 call strike added about 9.2 lakh shares. On the stock futures front, among the Nifty gainers, you had the likes of JP Associates, DLF and Tata Motors, where fresh long positions were being built up. Short covering was seen in IDFC, whereas some of the metal counters like Sessagoa and Jindal Steel and Power witnessed long positions. From the defensives, HUL and ITC NSE were down today, so fresh short positions were being built up for both these two counters. From the mid-cap arena, you had a lot of counters which did well. So the likes of Punch, Lloyd, HTIL, India Bulls Real Estate, long positions were being built up for these three counters. On the short side, you had Sun TV. Among the open interest gainers today, you had Sun TV, ICICI Bank, HDFC Bank and IndusInd Bank. And in terms of participation, well, the volume was less than yesterday. On NSE, we recorded about 97,000 crore of turnover.
Thanks for all that information, Navneet. Let's move on to the Asian markets. The Asian markets continued their Tuesday rally to hit fresh highs after data showed that the U.S. services sector grew last month at its fastest pace in a year, and a pledge by China's government to boost spending in 2013 lifted hopes for global economic recovery. Chinese property stocks got a bit of their life back after 2 straight days of decline, following renewed policy restrictions in the overheating property sector. Chinese banks too got a lift from positive policy announcements at the ongoing annual parliamentary sessions in Beijing. And so did Chinese telecoms on news that Beijing is going to issue 4G licenses within the year. Now, telecom stocks are leading the market rally in Europe today, with Vodafone being the biggest gainer on reports that the telco is in talks with Verizon, with speculation rife about the two companies discussing a full merger. Political uncertainty in Italy is returning to the forefront as the Italian president is now considering appointing a new technocrat government that would be led by a non-politician as a way out of the political stalemate. Now, Oil Minister Veerappa Moily has come out strongly in defense of oil marketing companies. After a crucial meet with top officials of IOC, HPCL and BPCL, Moily says switching over to export parity policy is not feasible at the moment, given that 84% of India's crude requirement is dependent on imports. He adds that OMC's need currently is to expand, generate surplus and modernize refining operations. Moily will meet with Finance Minister P. Chidambaram soon to come up with a pricing policy that is suitable to both parties.
Export parity, straight away applying it may not be viable. It needs to be reconsidered. All these OMCs survive only for consumption. They can't expand refineries, they can't modernize refineries, they can't go in for an the expansion whatsoever. If no expansion, no investment whatsoever, if you don't go on a productive line, put all these OMCs on a productive line, this is not going to add up to the fiscal consolidation. Merely deducting source, you are not going to improve.
Now, Standard Chartered Bank's Asia CEO Jaspal Bindra says that the finance minister's focus on fiscal prudence in the budget would help revive sentiment. He believes that India's woes have bottomed out and one can expect growth from now on.
We're feeling very encouraged by the recent budget pronouncements that the Indian Finance Minister has made. We think it's clearly eliminated the risk of a populist budget in an election year, which in itself is a huge achievement. And whatever they can do towards fiscal prudence, which they have outlined, will be very positive from an investor sentiment and confidence point of view. We have called a bottom on India. We think things will look up from here, and that is on the back of the recent reforms that the government has announced.
And on to Motown, Mahindra & Mahindra's XUV 500 is seeing strong volume growth in international markets. The company is now looking to set up an assembly unit overseas to meet the rising demand. Kartika Trehan joins us for more on that. Kartika?
Well, absolutely. We understand that M&M is looking at setting up an assembly unit in Australia as well as in Latin America. This is coming on back of the fact that the car's XUV unit is doing pretty good for the company at this point. The XUV's demand in the overseas market has exceeded over 500 units, based on which the company is now looking at assembling the car over there. This entire move would possibly come during the first quarter of FY14. We understand that the company is seeing good demand coming in right from Australia, Brazil, Latin America, European markets as well. So that's one of the reasons why the the company is now looking at locally assembling the product there. However, this will also benefit the company going forward because this will reduce the duty for the company once they start assembling XUV 500. The price point that XUV is launched in most of these markets has been pretty aggressive for most of the companies, and to see more demand coming in for the product right there. XUV's demand in the local market itself has been doing pretty good. The company has crossed over 10,000 units. That's how much they're selling every month. So the demand of the product has been pretty good because they've launched in a killer pricing in the Indian market as well.
Well, thanks so much for that, Kartika. Well, we have right now with us Arun Bhatia, who's joining us and going to be talking about the Air Asia deal. So let's go across to Sumit Chaturvedi, who's conducting that interview.
Congrats, sir. You have got clearance from FIPB for the new airline. What is the next step going to be?
I think there are other clearances to be taken from other departments, DGCA and all. So there are plenty more clearances to be done before anything else can happen. FIPB clearance is done today, but there are plenty of other clearances to be taken.
So, Aviation Minister said in the morning today that there can be some procedural issues with the airline. So, how confident are you that the airline will be finally able to take off after it has got FIPB clearance?
I think we are pretty confident, and we hope that we will not face any other hurdles. We'll try and satisfy whatever needs to be satisfied as far as procedural work is concerned, and we perceive no hurdles. So that's about the crux of the matter.
And sir, about the hiring, there were reports that you have started hiring people. You are in touch with some commanders, pilots. So have you really started hiring for the new airline in India as well?
No, we are not hiring at the moment. We are looking around because if one has to start the airline, one has to look around prospective pilots or commanders or CEOs or whatever. So one has to look around. Nobody's been hired as yet.
So, airline is also very keen to have Mr. Tata as chairman of the airline. So how confident you are that you will be able to convince Mr. Tata to be chairman of the airline?
One is hopeful that he will become chairman, but it's a decision that he will have to take. One would be very happy that if he accepts to become the chairman. That's his decision, but one is hopeful.
Okay. So there were also reports that now instead of starting airline at the end of the year, you may start it in June. You can bring forward the date. Is it possible, and are you really planning to start in June, or will it be coming in the end of the year only?
See, projections are end of the year. If you can get clearances earlier and we can do the things much earlier, of course, we can start earlier as well.
What is the constitution of the board of directors, and if you help us understand in a bit, what kind of fund deployment will be done by you?
The board is basically Indian control board, whereby there is a majority of the Indian directors, and it's basically an Indian company controlled by the local Indians, and our funding is in the tune of about 30 crores of rupees initially.
And sir, Kingfisher Airline is now grounded, and their staff is available at cheap, at low, so, and some of their infrastructure is available. Will you look at now their infrastructure because it's readily available, and that too at a low cost?
That is something which will be discussed probably later. I don't know anything about it as yet. We haven't looked into it as yet.
So one last question, sir.
That was, of course, Arun Bhatia to ET Now, making it very clear that they're looking to start operations by the end of the year and have already started scouting for employees. Well, let's move on. The government begins the last leg of its disinvestment program for the fiscal. The empowered group of ministers met today to take a final call on the government's stake sale in Rashtriya Chemicals and Fertilizers. The divestment will go through by the OFS route, which is the offer for sale route, on the 8th of March, which is a Friday. The government hopes to sell 12.5% stake, or close to 6.89 crore shares, and is looking to rake in close to 300 crore rupees. Remember, the revised divestment target for the fiscal is 24,000 crores, and so far the government has managed to garner 21,500 crore rupees through share sales.
The notice to the exchange will give it to the evening, and OFS will come day after tomorrow, sir. How much is the government looking to divest the entire 12.5%?
The farm loan waiver scam rocked the parliament today after the CAG report alleged massive diversion of funds. Prime Minister Manmohan Singh has promised stringent possible action against the guilty. The CAG report on the scheme mentioned that several ineligible farmers were favoured and a large number of deserving small and marginal farmers were left out in implementation of the loan waiver scheme. The opposition stalled the proceedings of the House and targeted the government over the alleged irregularities in the farm loan waiver scheme. Let's hear out the Prime Minister.
The reference is to the CAG report on loan waiver scheme, and this is a matter which should be interesting to the PSC, as is the normal practice. But if there are any irregularities which have been shown, I assure the House we will take the stringent possible action against the defaulter.
Now they should audit each and every account. Each and every account, then they should submit a list of eligible people who could not get benefit. That list they should submit, and that audit has to be completed as early as possible. That communication the Finance Ministry has already sent.
And with that, we wrap it up right here. But thanks for watching, and keep it right here with ET Now.